You're either buying, selling, or doing nothing. We're going to talk about that next. G'day traders, Stacey Burke from Stacey Burke Trading. Hopefully everybody's had a good start to the trading week. We've had 3 very good days of movement on the pound crosses. I've just looked at oil. It's down below $20 right now. The S&P has started to drop down. The currencies are moving. We are definitely going to be in for some volatility in the next few weeks. What's really important is to make your trading as simple as possible so that you can duplicate that. You can identify a couple of key setups that show up on a daily basis on one of those 6 pairs. Trade them, get better at them, get better at identifying them, fighting for the best price, having asymmetrical risk reward, taking profits off the table. These markets will reverse very quickly. They'll paint a scenario where you want to hold on for more, and before you know it, you're stopped out with nothing. So it's really important to take profits. But today we're going to talk about buying, selling, or doing nothing. Trading is as simple as you want to make it. Bruce Lee talked about removing the things that were mundane and trivial that were not part of making things really, really simple. Now, I've had a ton of emails, and I really appreciate all the feedback, the emails, the comments, all the likes. I'm committed to you guys to give you the best content possible about real-time, real trading scenarios. And we've talked about our simple steps: structure, identifying geometrical patterns, whether that's on a 15-minute chart, on over several hours of trading, whether that's just in the Asian session prior to heading into the London session, whether that's the previous US session, Asia and London, heading into New York. So it's important to be able to identify rectangles, ascending triangles, descending triangles, double tops, double bottoms, head and shoulders, reverse head and shoulders, geometric patterns that will allow us to have possibly a better thesis, and also, instead of just targeting our 50 pips, looking at getting more out of some of the trades that are going to give you a bigger geometrical measured range for your money. We talk about the significance of the high and the low, yesterday's high, yesterday's low, the timings. We've talked about the 3-hour rotations, the 12 candle window around the timings. The market opens will typically be either an extension of a move. If they're in consolidation, it could be a stop hunt or a continuation of a move. Trend trade, a stop hunt outside or back inside. If the market stop hunts out, the next hour may stop hunt back in. So again, these are all the scenarios you need to be running in your head, and we're using 15-minute charts. So it's important that you remember that in that 15-minute, that hourly rotation. So a candle formation or price formation around numbers may show up. But again, if you're looking at timings, we want to be maybe entering into a move that's about to take off, possibly at the last candle or the first candle of an hour. If it's an open drive, if it's a reversal, it may take the end of the hour for 3 or 4 candles to paint a reversal pattern. Just start remembering we want to fight for the best price. Numbers, double zeros and 50s, price confirming our thesis. So we want to see evidence, not just getting in there and hoping that we're right. We want to wait for the market to show us that it's consolidating, possibly reversing, or continuing the move. Then we want to fight for the best price, set our stop loss in place, 1 ATR, 1 bar, whatever that is. Usually for me it's a 1 bar stop. There's a bar that you should be able to identify that if that bar is violated, your trade is incorrect or it's invalid at that stage. And then profit targets. Knowing that these markets will usually move in 50 pip increments, setting and watching how they behave. If they are getting to the price, if they're getting to a higher low first, they may exhaust at the higher low, or are they strong and moving right through to your target. And in some cases you may miss out on a bigger movement. But again, focus on getting really good at these steps and then work on tweaking them and getting more out of your winners, making sure you're cutting your losers, or getting even tightening your losses up even better. And then trade management, knowing how to hold on to your trades, not getting shaken out of winning trades, not trailing too tight and getting stopped out at break even, going to break even too early, changing your mind midway about how to manage a trade, all those things. Know what you're going to do before you go into the market. Have a plan, have your targets set, be happy with that, improve upon the trade each and every time. Your performance, keep reviewing and assessing your performance. Look at how you can be doing it better, but understand that the difference between testing your strategy out in quiet time versus live market time is where your nerves will be put to the test. So one of the things we're going to be talking about today is buying, selling, or doing nothing. Like, trading is really that simple. There's really only two areas that we should be trading: the high, the low, or numbers. So that's simple. Okay, so the high, the low, and at numbers. Now the second question you have to ask yourself is, are you buying, selling, or doing nothing? So when we go through our timings and the market has its Asia, Europe, London, New York, the market may be working an area into the open. You may have a price pattern there. The question is are you buying, selling, or doing nothing? And that's how simple trading is. We know that we're going to have a 1 ATR stop. We know that we're going to be setting targets at 50 or 100 pips, whatever that is, measured moves. So we know our target is set. Could be 50, could be 45, it could be the numbers. You know, each trade scenario is different depending on how you have been able to execute and fight for the best price. And also acknowledging that your target may be beyond the numbers at the high of the day, or maybe beyond the high of the day for a measured move. So these are all the little things. But that's how simple trading needs to be. We know that, okay, if the market gets to 50, okay, I may be buying here, but is it giving me a continuation trade, or is it giving me a reversal signal to trade back up and get traders who are short, or maybe even go through there for a measured move? Buying, selling, doing nothing. 1 ATR stop, profit target, you're done. Trade is over. You're going to make mistakes, and you need to build your playbook and start identifying the 5 or 6 best trade setups that show up every single week, and the 2 or 3 setups that you resonate with best, that show up on a regular basis. All of you people that have been following me, you're seeing the 50 pips or more every single day, and in a lot of cases there's one in every session. So the better you get, even with the timings, understanding when these are going to move and looking for these patterns in the Asian session, in the London session, and in the New York session. And sometimes there's more than one trade in each session. So some days you're going to have consolidated markets, you're going to have low volatility. But the longer you focus and keep it simple, you're going to understand that it's okay to not trade. If it's not right, don't trade. Keep thinking timings in your head, the clock, the hourly rotation. If you're looking at the chart and you think there's something there and you're an hour outside of the New York Open, be aware that the market may still have another leg in it or a stop hunt left in it before it makes its big shift. Look at the price action. But again, keep it so simple that you know exactly what you're doing. I'm going to be buying here or selling here or buying here. I'm going to have a 1 ATR stop. I'm going to have a 50 pip or a 75 or 100 pip target, whatever that is based on the scenario that's painted that day. Place your order, place your stop, place your target, you're done for the session. That's how simple it is. Now as far as trade management goes, there's a discretionary part to each trade on its own merits. So some trades are going to go, you're going to go to break even right away. They might move 35 pips. And the volatility may be such, though, that a 35 pip fluctuation back and forth, like we saw a few weeks ago when the markets were extremely volatile, a 50 and 100 pip movement back and forth was not that unusual to see. So it's important to program in your profit targets. before. Don't use a discretionary exit. Have them set in, because the markets will spike a lot and take you out of your trade with 50 pips sometimes in less than 5 minutes. So it's important to understand that if you keep it that simple and you've got a couple of simple patterns that you're looking for and you can duplicate that, the next important part of that is scaling it up in size. So I'm not interested in trying to get 250 pips, 300 pips a week and just scalp all over the place just so I can get 300 pips. What I'm really focused on is taking the best trade setups that fit my criteria, that I know I have a high probability of getting my 50 pips or my 100 pips with a 1-bar stop at the right time, at the end of the hour or at the beginning of an hour. The market has given me that price confirmation. I walk away. Sometimes I don't even watch it now, because if that trade is right, it's going to go. Me sitting at the screen can't change that. So I try not to sit and watch and finesse a trade. If I get stopped, I'll walk away knowing that I would rather get stopped out than sit there and hesitate and question if I should move my stop or give it a bit more wiggle room. That's how you blow up trading accounts. Put your stop in, put your target in, walk away. Set an alert for 30 pips, whatever that may be, 1 hour. I basically have a built-in time factor. If I'm not in profit or seeing some indication of profit after 1 hour, I will seriously consider closing that trade out. Now, in the majority of cases, if you're wrong, you're usually wrong in 1 or 2 bars. So if it's sitting there longer and it's still not going into profit, you could be in a counter trend trade of a measured move or a squeeze pattern for a big explosive move against your position. So that's really important to understand. But if you can keep it this simple, you can trade consistently, you can duplicate your results, you can scale that up in size, and again, you're going to make mistakes. Learn from them. Trade really small until you start to see that consistency, not only in your results, but in your process. Your process, your process. Do these steps. Design something so simple that you can do it every single day. The setups, there's an abundance of those setups every single week. Then get better at trading them and trade them bigger. So hopefully you got some value out of today's video, traders. Keep it simple. KISS principle. It's that simple. Buying, selling, or doing nothing at the right time, at the right levels, either the high, the low, or the numbers. 1-bar stop and asymmetrical risk reward. Have a great trading day. Keep it simple. Keep getting better, and may the markets go with you.
Hi traders, it's Stacey Burke from Stacey Burke Trading. If you haven't done so, please head over to my website at staceyburketrading.com. I create updates on almost a daily basis, and I would love for you to receive them. Just click on the blog. If you want to enter your name and your email address, I'll send you my free audio program, the 7-Step Daily Routine for High-Performance Traders. This is essential knowledge for all traders in all markets, and this is for helping traders to master the market with discipline, confidence, and a winning mindset. I appreciate all your feedback and comments. As always, traders, stay disciplined, and may the markets go with you.